Asian shares were subdued after data showed that China's consumer prices still remained soft. And local company news, supermarket retailer Spar reported a 7.6% decline in half-year earnings as cost increases slightly exceeded lower than expected turnover growth, while IT system issues hit gross margins. Mobile operator Telkom reported that it expects earnings to at least double in its full year as it bounces back from hefty write-downs. However, it has also indicated it has seen improvements in its underlying business as well. The S&P 500 and Nasdaq ended higher overnight, charged by sharp Apple share gains after the stock declined in the previous session, while investors also awaited consumer inflation data, which is due this afternoon, as well as a policy announcement from the Federal Reserve. The central bank is likely to leave rates unchanged, but will release its updated economic projections and dot plot, which shows where policymakers expect interest rates to stand this year and longer term. The S&P 500 closing 0.25% higher, Nasdaq up 0.8%, and the Dow Jones in negative territory, down 0.3%. Locally, the rand is trading at 18.62 to the dollar, 23.76 to the pound, and 20 rand 04 to the euro. JSE higher at midday, with the all-share index adding 0.4%, just at about 76,000 points. Markets in Europe extending gains, and when we look at the commodities picture, gold is trading at $2,312, platinum $956, and a barrel of Brent crude will cost you $82.58. On the capital market, the yield on the government's 10-year bond, that is around 8.96%, with the 10-year at around 2.5%. However, to give us perspective on the markets, we are joined by Patrice Rousseau, who's the CIO at Ashburton Investments. Patrice, thank you so much for your time. We're inching closer and closer to the US CPI report, which we've been wanting to look forward to, as well as that Federal Reserve policy meeting later this evening. What's market sentiment like?
Good afternoon, Anastasia, and to your SABC viewers. Yes, market sentiment really hopeful that we'll have a good inflation print. Unfortunately, this is likely to be still far above the 2% Fed target, which means that the Fed is expected to remain on hold and is likely to be so at the end of July at its next meeting. So we're not seeing any signs yet of interest rates being cut in the US, because inflation has been well above their target. But at the same time, I think as long as the direction of travel for inflation starts to point downwards, I think there will be a more positive reaction from markets.
I mentioned in my intro that we're expecting them to release their updated economic projections as well as the dot plot. Have you given much consideration to what a difference in 2 cuts or 1 cut in that dot plot projection will mean for markets?
Yeah, it's a very good point. I think we have to step back. Beginning of the year, there were expectations of 7 rate cuts. Right now, there's kind of expectation of 2 rate cuts, maybe towards the tail end of this year. So the dot plot gives you an indication as to how Fed members see the future and gives you a better indication of their intentions in terms of monetary policy. So again, a more dovish stance whereby they feel more comfortable with inflation and likely to cut will be seen quite positively by the markets.
So let's talk about company earnings and look at Spar. So they released their numbers. One of the things that stood out to me is that they're planning to sell their Polish operations, but they also have issues again with that SAP system. The share price is up 7.4%. What was the highlight for you when you look at those numbers?
Yeah, very interesting. It's quite surprising to see such a strong reaction, because they had guided that their earnings would be somewhere down between 3% and 13%, and they declined 8%. So it's right bang in the middle of that. You're right. I think the market is expecting them to exit Poland and reduce their debt burden there. The rest of Europe, I think it's quite problematic still. I mean, we've had a minimum wage increase in Ireland. That means that their employee costs are up over 9%. So that's difficult condition. And in Switzerland, revenues are going backwards, negative. So tough conditions there. But I think hopeful that in South Africa, with their KZN and systems issues, that things will come back on track. And they've reopened their warehouse, their distribution center. And again, they've been able to maintain margins fairly flat. So and manage costs quite well. So recovery in margin is what market is looking forward to in South Africa. And I think a refocus on the South African operation.
We had a trading update from Telkom, and this one was a little bit tricky to read given the write-offs and the once-off sales. What did you make of what Telkom has presented? Yeah,
as you say rightly, they had to restate the previous year's losses. So talking about a range of 375 to 378, again, it's, I would say, sort of in line with expectations. I don't think shooting the lights out. They delivered EBITDA growth of 18%, share price up 6%. Again, market seems to like it, maybe similar to SPAR. So it's not a number which shot the lights out, but maybe given the poor numbers in the base, market likes the fact that there's some improvement being shown.
I remember quite some time ago, a few years ago, PPC was a share price that people, we spoke about and we could, unpack in greater detail. Here they've released a trading update as well. What do you make of the new management team, and do you believe that the cement company is positioned for growth?
Yeah, there's another story. I mean, it's 3 in a row now where they suffered losses a year ago. Now they posted headline earnings, which are positive, talking about 16 cents to 20 cents a share. So there's an improvement there, and also quite a big improvement in turnaround from PPC Zimbabwe. They had a kiln shut down in the prior period. They've reopened that. They also suffered some translation losses. So they've moved their functional currency from the Zim dollar to the US dollar, which helped the financial performance as well, and also disposing of their operations in Rwanda. So it's very much a rehabilitation story and back on track of profitability, and yet market don't seem to like these results, down almost 9%, which is quite surprising given that I think there's a lot of positive news in this set of results.
The one thing that's exciting, and I would have loved to talk to you about Process, but let's move to something that's a little bit more exciting, and that is Apple pushing into AI, which some people say could spark a super cycle when it comes to the smartphone upgrade. But then you look at Wall Street's reaction, not quite impressed with this particular one, especially when it comes to the announcements. What do you make of Apple Intelligence? And I'm wondering whether you are the audience that Apple is trying to capture for that iPhone upgrade.
Yeah, it's an interesting one. Apple was very early, I would say, in the AI trend with Siri, so which was a form of artificial intelligence you can use on your phone. Obviously, they're looking to do a lot more now with embedding some of the open AI products. As you've said, I think every management team on Wall Street now feels compelled to mention AI and have an AI strategy when it comes to reporting their numbers. So Apple didn't want to be left behind, and now they have this venture going. Look, as long, Anastasia, as this new AI can find my keys and can find my wallet, I'll be happy with using it.
So you're getting an iPhone upgrade, is that what you're saying?
If I can afford it. I'm not sure I can quite afford the iPhone 15 Pro Max given the exchange rate. We will need the exchange rate to get a lot stronger first.
All right, Patrice, thank you so much for your time. That is Patrice Rasoos, the Chief Investment Officer at Ashburton Investments.